Welcome back to America's Commercial Real Estate Show. I'm Michael Ball. This segment's brought to you by my company, Bull Realty, Asset and Occupancy Solutions. Visit bullrealty.com. Well, today we're talking about industrial real estate, and what a great sector. It's been on a great run for several years, and boy, industrial folks really need it. It seems like there was some tough times in past years, but boy, it's really been a roll. Well, now we have a big developer. If you've heard of Majestic Realty, I'm sure around the country. We have Will Lombard with us, and he's a VP with Majestic Realty, and he's in Studio One with us. Will, thanks for being with us.
Thanks for having me.
Well, we've all heard about the e-commerce and these really big buildings, these really big tenants, and it's really been fueling industrial real estate for a long time. Is it still going on?
Absolutely. I mean, when you look at kind of the strategy of some of these bigger companies, it's kind of a 5-10 year plan, and they're still rolling them out annually. So it's big news. It's kind of the biggest news in industrial, and it will be for the next 10 years.
And is it still the big players that are active?
Yeah, it's Walmart, Amazon, and it's the FedEx, UPS, and DHLs of the world trying to keep up with them. Yeah. So absolutely, in any growing market, those companies will be doing deals.
Yeah. And do you really see any stop in this? I mean, it seems like we still get continued reports of online sales continuing to grow, and I guess that's what they're seeing and say, hey, let's just build. And these buildings are, what, all of them over 1 million square feet?
Depends on the market. They can be. Atlanta probably has 3 million, 4 million square feet of Amazon buildings. They've got 1.2 million square feet for Walmart. In a bigger market like Atlanta, I think that's typical, but in a smaller market of Springfield, Missouri, you might have a 200,000 or 300,000 square foot building. So it's kind of, matching up with the size of the market.
And these big users, are they mostly going into build to suit, or are they also leasing some of the spec buildings?
They can lease spec buildings, but a lot of the e-commerce fulfillment centers have kind of unique features to them, whether it's clear height or power needs or column spacing. They kind of tend to be build to suits just to fit everything that goes inside the box correctly.
Yeah, and I think some people might be surprised at what that box looks like today, right? Mm-hmm. So describe one of your more recent deals where you said you had one that had the 40 ceiling height, and they're doing 4 levels in there?
Yeah, we just did a deal with a company called ASOS.com. They are a British fashion apparel company that's new to the U.S. We built a 1 million square foot building that was kind of fully loaded up with 8-inch slab, 40-foot clear, insulated roof, 500 trailer parks, 500 auto parks, and they came to the market and they needed a 40-foot clear building. We were the only spec building that had 40-foot clear in the southeast, and kind of became a natural fit. And they're doing in about 600,000 square feet of the building, they're doing a 4-story mezzanine with I think it's 38 or 39 miles of aisles. Wow, across 4 stories.
That's got to be cool to just walk through and see in action.
It is. I mean, yeah, I told them they should do a charity marathon in there or something.
That's great. And we were talking before the show, and you mentioned that one of the things that's really important to these companies today are the labor and reducing turnover. And I think we think about that in commercial real estate in the office environment. But I don't know if we thought about it as much in the industrial, but that's what you're seeing, right?
It's lining up with office. You are looking, in Atlanta, you've got 20 million square feet under construction. Figure there's 200 jobs at least in each of those buildings, or for 1 million square foot buildings. You've got to do something to separate yourself as an employer to limit turnover. ASOS, they've got 60,000 square feet of office. They've got a gym, a cafeteria, an outside park with basketball courts, a tennis court, bocce ball, and then we also had some excess land, and they're going to put walking trails on 21 acres next to their site. So, when you're looking at ASOS working there, if you're a $15 an hour employee, or working somewhere else that doesn't have any of those amenities, it's a no-brainer.
Yeah, well, it makes sense. Like at our office, we have a game room, pool table, and darts and everything else, and I think you want to have a nice environment to cut down on the turnover. And these buildings you guys are building today, and you guys are all over the country. You're in California, you're in Vegas, you're you know, you're in Atlanta and you're in Texas too, right? So these buildings you're building today, these aren't your grandpa's industrial buildings today, are they? What are they like?
No. You know, being a long-term holder of real estate, you know, we want to be on the high end of clear height and every main feature of an industrial building. We want to have, we want to build buildings that we still want to own in 15 years. So even though you might be investing a little bit more to go 40-foot clear or have an insulated roof or, you know, do the LEED certification, in 15 years you're going to have a building that may be kind of standard to the market.
Right.
So we're seeing a huge difference now.
Is LED lighting just a standard now, or is that still a
on a new building? Yeah, I mean,
standard?
you know, the tenants know they're going to get their money back.
Yeah.
In 18 months,
Yeah.
2 years.
Well, another thing that seems to be impacting the commercial real estate world in every sector is construction costs. So is that impacting your industrial world?
It is. I mean, buildings 15 years ago would cost, you know, your budget would be $40 all in, and now you're probably $50 for a 1 million square foot building. Steel prices are going up. All of our steel suppliers are saying, you know, we can only lock prices for 4 weeks.
4 weeks. That's hard to plan.
That's hard to plan. And I think another big factor is just labor for construction.
Yeah.
I mean, it's really competitive out there. You want to have a sub that you know that can perform, that can staff the job. And I've talked to some subs that have accepted jobs, and they're scratching their head thinking, where are the people going to come from? You know, how can I compete? How do I pay labor to actually come and perform?
Yeah. Are you hearing any decisions adjusted yet because of potential trade wars and tariffs?
I'm not hearing it yet, but I would say, I mean, if you have, if you're heavily invested in a port market, it might have a little bit more of an impact.
Yeah.
But we haven't seen it yet. I'm hoping that nothing drastic happens, and that's not news.
Yeah. What are you seeing in automation and technology? Like we said earlier, these aren't your grandpa's buildings.
Yeah.
What's new today? What are people seeing?
Yeah, I mean, when I got in the business 11 years ago, it was pallet racking and forklifts, you know, and now it is, buildings can be a lot more efficient with automated material handling equipment. You know, packages are flying around buildings on conveyors. It's much more common, and it actually can allow you to have a smaller footprint as a user because you can move more product around quicker. There's less dead space if you're using automation and robots to pick your goods versus people.
Yeah. What is your tip or a couple tips, if you will, for tenants that are going to need space around the U.S.?
I think if you're in a competitive market, you need to find a broker you trust. You need to be able to make decisions quickly. You know, I know in Southern California and Atlanta and in Dallas, where I have counterparts, you know, there may be 2 spaces available for 100,000 square feet where you want to be, and by the time you tour in 2 weeks, one of them's probably gone.
Wow.
So, you know, it's so competitive. You really need to step up, make a decision. And yeah, maybe this is just developer talk, but don't get too hung up on rate. I mean, you need the right building. You need to know where you want to be, because you don't want to be forced in a situation where you're 20 miles away from your target.
Well, yeah, I mean, that's a good point. I mean, you know, we see it in the office environment as well. You know, if you're going to be more productive, have less turnover, and business is better, you know, maybe the increase in rent is very much offset by higher profits, right?
Yeah, I think for a bulk industrial building, I saw a stat a couple years ago. I think your rent is maybe 7 or 8% of your overhead. You know, labor, transportation costs are, you know, much more significant. So if you're paying 10% more for your rent, in the grand scheme of things, it's not really moving the needle on your total business.
So when you guys in the industrial world all get together, and we have some industrial brokers here at Bull, when you guys all get together, compared to 10 years ago, is this like a party atmosphere now? It's like the business is great, right?
Well, you know, I got in the business in 2007 when things were still kind of good, and then it really slowed down. I don't think anybody forgot how bad the recession is,
Right.
And I think a lot of people right now see an opportunity to make money. I think everyone's working really hard. You know, every brokerage, development, communities are all really competitive. So, you know, it's fun. We have a lot of deals to celebrate, but I think everybody is, still a little cautious. As fast as we're moving, I think everyone remembers what it was like.
Cautious, but you and other developers are building spec, right?
Oh, absolutely. I mean, I think out of the 20 million square feet under construction here in Atlanta, at least 2/3 of it is probably spec, or half of it. I mean, you've got a lot of companies want to get money out the door. Developers need to. I mean, you can't lease a building that doesn't exist. So they, people are getting buildings up. By cautious, I just mean everyone remembers what it was like.
Yeah. Well, that's a good thing.
So
what would you leave our audience with as a thought about industrial real estate today?
I think for the foreseeable future, industrial will continue to be a great sector in real estate. It's always been kind of the steady, let's minimize risk. Let's have some industrial real estate. But I think you're going to continue to see brick and mortar retail shut down. All that product, everything you buy is going to be in a warehouse. Mm-hmm. I think it's going to continue to be a competitive market all over the U.S. and I think we have 3 more good years of industrial real estate across the country.
One final question for you is, of course, these big $1 million square foot plus buildings are fun, right? They're great. Are you also expecting or seeing demand for some of the smaller buildings, maybe that are closer to these into the cities?
Yeah, the market for close in, bread and butter, 20, 30, 40,000 square foot spaces is incredibly tight right now. It's tougher to find land closer to the city centers. I mean, that's your one limiting factor. I mean, a lot of the good sites have been, they're under construction, built, or there's, something keeping someone from developing there. So it's, it's super competitive close in, but it's really hard to find a site to build a building.
Yeah, okay. Well, great. Well, Will, thanks for joining us. Great information.
Thank you. Thanks for having me.
And thank you for joining us out there. If you're watching on YouTube or onto the podcast sites or iTunes, we appreciate you being with us. And let us know what you think. And we also appreciate hearing from you and you sharing the show with your friends and colleagues. And join us next week. We'll have another great show. Until then, be sure you always lead, learn, and laugh. And join us for America's Commercial Real Estate Show.